Joining me now is Potomac Wealth Advisors founder and president, Mark Avallone. Mark, good to see you. Are we entering a bearish period now? What do you make of the last couple of days of declines and this morning as well?
Well, good morning. And even though it's only been a day or two, it does feel like it could be the beginning of something. And that's what's interesting about market downturns. We never know if it's the beginning of a healthy correction, something in the normal 3 to 10% range, or if it's the beginning of a major correction and a pullback. And that's the question investors face. We think it is going to be just a intermediate downturn in a continuing bull market. But look, we've had some interesting news the past few days, or at least some comments we heard from some CEOs about concerns about valuations. The words AI bubble increasingly appear, and now we have a move towards socialism in some of the local elections, which wouldn't do well for capitalism and corporate earnings, which ultimately drive stock prices. So maybe that could also be a slight underpinning to what's happening in this near-term correction.
Yeah, it could be. Look, what's your take on the macro story this morning? We're waiting on the October ADP number out this morning at 8:15 a.m. Eastern. The yield on the 10-year now sitting at 4.08%. Economists are expecting 28,000 private jobs added to the economy after companies actually cut 32,000 jobs in September, Mark. You've mentioned a tight labor pool before and sticky inflation. What are you expecting from the macro story?
Well, I'm going to stick to that. I think that when you have a shrinking labor pool, it does put upward pressure on on wages. I think that's good for consumers, but with inflation sticking around 3%, it kind of ties the Fed's hands to future rate cuts. We have a strong economy, we have high asset values, and we have inflation that is not near their stated at least 2% target. That's why they pulled back their December outlook on rates. I'm not saying at all that they're looking to raise rates, but I think they're going to slow the cut in rates. And that could also be spooking the markets a little bit, because the markets were building in a more aggressive Fed. I think overall we're going to have a steady, growing economy. The ADP jobs number being positive points in that direction. And I think that where we are right now is actually good long-term for stocks. We just may have to sit through some interim volatility because some of the factors we mentioned earlier, some of the uncertainty.
All right, Mark, we'll leave it there. Great to see you this morning. Thank you, sir. Mark Avallone joining us this morning.